Been talking a lot about underfunded pensions recently and that the economy is doing well and states should be sort of adding to their rainy day funds, but they might not be doing so as much as they need. What are you thinking in terms of a credit analysis perspective that if the economy starts to turn, what states would be in a little bit of trouble from that?
Yeah, so if you take a look at states' rainy day funds and think about this as an individual savings account, they're up about 2.6 days of cash on hand across a median basis for all 50 states compared to pre-recessionary levels. However, what's concerning is that the lowest rated states, Illinois, Connecticut, and New Jersey in particular, have lower days of cash on hand than those 2007 levels. And these three same states have significant unfunded pension liabilities, and their funded ratio is only at about 35%. During a recessionary period or a downturn, these pension assets are going to also experience lower returns than what's being assumed. So the liabilities is only going to increase for these three states in particular. So it's going to be a continued challenge, and outside of significant tax increases or major pension reform, we see it being very tough for them to get out of the hole.
Well, speaking of pension reform, it's not a total reform, but we did have a Supreme Court ruling that came in that gives states a little bit more negotiating or bargaining power when it comes to the public sector unions. What states would that really help?
Yeah, so the Supreme Court ruled that non-union government employees did not have to pay fees towards collective bargaining. And these three same states, again, significantly unfunded pension issues, should be able to leverage that negotiating power on a longer term period. And I think that if you take a look at public sector and you take a look at right to work states, these states don't already mandate their public employees, non-union employees, to pay fees. They have a 10% better funded ratio when you look at their pension funds than the not right to work states. So we do see these three states being able to benefit from the most on a long-term basis.
And then just quickly, I want to talk about another Supreme Court ruling we got about online sales tax. Yes. What states could benefit from that?
Yes. So I think overall, the states will have a limited impact across all 50 states, but the three states that should have the largest will be Michigan, Nevada, and Louisiana. And this is based upon the fact that they already have a heavy reliance on sales tax, or they have high sales tax and they weren't able to tax this beforehand. If you kind of look at a longer term basis, as online sales increase year over year and that trend goes up, we think most states should benefit over that longer term period.